Today's oil and gas production has become much more competitive due to a number of factors, such as environmental regulations that are ever increasing in number and complexity, the need to demonstrate sustainability in a mature and globalized market, spiraling capital and operating expenses as hydrocarbon extraction becomes more and more difficult, and all of this while striving to meet a very demanding production forecast quarter after quarter. Traditionally, each of these areas has been managed within separate lines of business, but this operating mode simply isn't adequate in today's competitive upstream environment. SAP BusinessObjects has analytics applications for oil and gas that address these challenges by providing transparency and visualization to all of the interrelated areas of upstream operations. For example, operations executives with responsibility for one or more entire business units can get a macro view of overall performance, while the manager of a single asset can view a more detailed version of the same production data to facilitate analysis of site-specific performance or problems. Effective visualization across all of the areas that impact the productivity of an asset is imperative. Without such analytics, a production engineer may exceed their forecasts, but it could come at the expense of a higher rate of incidents to both employees and equipment. Similarly, the operating capabilities of pumps and compressors can be pushed to increase volumes, but if this pushes greenhouse gas emissions beyond permissible limits, it could more than negate the incremental production. Let's take a look at how an SAP BusinessObjects application can help to overcome many of the challenges we just discussed. Here you see the main screen that provides a global view of the various business units and their adherence to a common set of KPIs. In the upper left quadrant, the overall performance of each business unit is illustrated by a traffic light type status of green, yellow, and red. The status of each entity represents a weighing of the statuses in three fundamental areas: health, safety and environmental, capital and operating expenses, and production volumes. Although your production rates and expenses may be within tolerance, if the HS&E area is non-compliant, then the business unit is not operating at maximum efficiency. Drilling down to the North Sea business unit, for example, we see a red status at a glance. It's obvious that the overall carbon emissions in this region are at critically high levels, issuing an urgent alert even though training compliance is low and the safety incident rate is excellent. In the lower left quadrant, we see a very high-level view of how the oil and gas production volumes are performing versus forecast, but let's take a closer look at production in a particular asset of interest. By drilling into the production dashboard, we get a much more detailed presentation of information. We want to look at the Texas asset, so we select the United States business unit and the Texas asset. This ability to navigate up and down throughout the production portfolio assures that all eyes are managing production operations from a common source of transactional data. We are presented with a KPI scorecard with the particular metrics that we want to manage against. Each row provides an immediate view of that metric's actual performance against plan, followed by the calculated variance. We see to the right a time series analysis for the trailing 24 weeks. This view can be altered to look at quarterly or yearly time series as well. If we are interested in the actual quantity behind the chart, we merely have to hover over a bar to get the PSI for that time slice. On the bottom half of this screen, we can observe a steady production decline over a broader time period. A reservoir engineer may want to view this decline in the context of planned and unplanned outages in order to determine how much of a production shortfall to attribute to natural reservoir depletion or to excessive equipment failures. Notice on the sidebar at the left that there are a number of links to underlying systems in order to perform further analysis. One of the key advantages of SAP BusinessObjects Analytics is their ability to perform on top of any source of data. The sawtooth anomalies in this decline curve may drive the engineer to an underlying plant maintenance application for a deeper look at the production impact due to failures of a particular class of equipment. Navigating into that particular application from the analytic is not only more seamless, but it also allows a contextual drill down that already identifies the asset, time period, and metric in question. As you have seen, SAP BusinessObjects Analytics looks across the various domains of productivity, human safety, facility incidents and emissions, and ongoing CapEx and OpEx performance. Having a holistic view of overall operating efficiency certainly speaks to corporate sustainability, which is fast becoming a leverage point for competitive advantage. Managing upstream operations to a standard set of metrics also provides an advantage in an environment of rapid and diverse asset acquisitions. By holding all assets in the portfolio to a common set of KPIs, performance comparison across physical entities becomes a viable goal. SAP BusinessObjects analytic applications visualize huge volumes of transactional data in a way that exposes what really matters. Instead of achieving departmental goals at the expense of other critical factors, you can begin to measure your enterprise to overall operations efficiency, resulting in a more profitable, safe, and earth-friendly enterprise for the long term.